But really, the inflationary pressure that we're seeing is a supply side inflation. In other words, it's not driven by too much demand. It's not driven by government spending on serve and so on and so forth, as some politicians have argued. But really, it is a consequence of the supply chain problems that we had. Let's be honest, we spent the last 40 years trying to build this globalized economy where production happens in multiple different places and all of that. And then we had COVID, which shut down many countries, broke down all of those supply chains. We recall all the backlogs and so on and so forth that we saw in different places. That really contributed to the inflationary pressure that we see. And at first, when inflation started to creep up, we're going back to the second half of 2021. Most analysts and certainly central bankers assumed that it would be short-lived. It's kind of like if you have a big storm, a bunch of flights get canceled, but then as the storm goes and people get back on planes over the next few days, the airport goes back to normal. That was kind of like the thinking that's going to happen. Things will ease up, inflationary pressures will go away. This is late 2021. And of course it didn't. And it got a little bit worse. So then it was time to act. And then on top of that, we had the kind of energy price increases that we saw exacerbated by Russia's invasion of Ukraine and some of the sanctions afterwards. So those are the two primary drivers of inflation. The other factors to consider are some of the geopolitical tensions, not only Russia, Ukraine, some of the European tensions that are going on there, but increasing tension that we see between China and the US and the degree to which that will contribute to a rethinking of the way we have set up our global economy, perhaps bring in some production back on shore and the changes that will go on. That's a dynamic that will remain in the foreseeable future. Just today, we heard about increasing tensions between US and China. So that's a dynamic that will go on as we may see a regionalization of global economy and move from the globalized trend that we had seen over the past 40 or so years. Climate change is going to have an impact. It's going to have a major impact, and we don't understand it sufficiently. We don't know where it's going to hit because all kinds of weather patterns are disrupted, and it doesn't seem like there's enough political will to seriously tackle that. So this is going to have an impact, whether it is in destruction of crops, destruction of physical capacity, capabilities that we have, or disruption of some of the trade routes that will happen as a result of this. So climate change will remain a factor in this and has already contributed to inflationary pressures. Last, on the supply side, but certainly not least, there are reasons to believe that on top of all of that, we have corporate profiteering, excess profiteering that, and here I'm not talking about small businesses. I'm not talking about mom and pop shops or low, family-owned restaurants who are all struggling, by the way. I'm talking about highly concentrated sectors. And in Canada, we have more concentrated sectors than many other countries. So we've all heard about the grocery chains and the issue around them, but it's not limited to them. We have a lot of what we call in economics, oligopolistic sectors. And we've seen the profit rates increase quite dramatically over the past 15 to 18 months or so. So there is a reason to believe that some companies are taking advantage of the situation and adding to them. So that's adding to the inflationary pressure. What is not adding to the inflationary pressure, and this is where I want to sort of challenge those politicians who like to sort of throw these things out, is wages. The wages have remained behind inflation. We have seen roughly 5% increase in wages, but those have been in response to inflation as opposed to causing inflation. And even then, those are nominal wages. In other words, the number's gone up, but in real terms, wages have actually declined in many places. So There's no wage pressure here, although, again, most economists will keep throwing that out at you. Some politicians will try to keep that out at you, and so on and so forth. But the question comes up, is this going to cause a recession? Which is another thing that a lot of people are worried about. And how deep a recession are we likely to see if that is indeed the case? And I have to say that the jury is out on that one. It's kind of hard to tell. There's no question that it will cause the economy to slow. We've already seen that. We've seen that in many countries. It is likely that we have some kind of a recession defined as 2 consecutive quarters of negative growth, but it does not appear at this point, or at least it's hard to predict, if it is going to be a very severe recession. The key factor here is the unemployment rate, which remains historically low in Canada, as it does in the US. The job numbers came out in the US again, it was much higher than many people expected it. So as long as employment stays strong and we already have a situation where we don't have sufficient workers, we are not likely to have a very deep recession, but things can change very quickly. As we know, in a market society, in a capitalist society, it's ultimately the profit rate, profitability, that determines what's going to go on. And if profits begin to decline, companies will be very quick to lay off large numbers of workers, as we've seen in the tech sector, for example. I don't anticipate that personally in the near future, but again, who knows? These things can change really quickly. So most analysts would suggest that we are likely to see a relatively mild recession. Some people suggest that maybe we could even skip a recession. Most people don't anticipate very large unemployment rates to emerge. And that is good for us overall in the economy. Now, the impact will be that the slowing down of the economy will mean that most likely the kind of rate hikes that we've seen will be moderated in the coming months. US Federal Reserve has hinted that they may have 1 or 2 small increases coming. And again, we are likely to keep pace with them. So if they increase it, we may do that again to preserve the value of Canadian dollar. But I expect that not to be very strong. We've already seen things like mortgage rates to level, even drop in some instances. I think the anticipation is that this is roughly where we're going to be. So, for those of you guys who are thinking of possibly purchasing, you're not likely to see huge increases in interest rates coming up. And I know that's a concern that people have.
Subscribe now.